So we have to find out the genesis of this rally, which means we have to find the birth of this rally. We have a lot of tendency for the price to move in a downward direction. Can't draw such a big, profit ratio. Took out the liquidity and again went inside the consolidation zone. So we expect a sideways movement. Hi guys, welcome back to the Trade YouTube channel. So today we are going to look at a price action strategy which is very logical and which works out most of the time. Okay, so when I say most of the time, it's a huge probability. Trading is all about probability. There is nothing like 90% or 100% of accuracy. So this is purely based on price action and no indicators involved at all. Maybe you can add this logic to other setups which you have. So this can give you something like topping on the pizza, extra topping on the pizza, which can increase your accuracy much more. So without wasting much time, let's get into it. So what we are looking at is, we are looking at the Nifty chart, and it's a 15 minutes chart. So if you zoom out a little bit, okay, if you come out and if you look, you can see overall the market is in a downward direction. You can clearly see that the market is in a downward direction. So after the price started to move in a downward direction, there is a little bit of consolidation which is happening in these areas. We can see the price came from here till here, breaking the lower lows, came here, broke this low, again came here, broke this low, came here. But once the price reached these areas, it is not breaking any lower low, rather it is moving in a sideways direction. So one important thing what you can look right here is a price action which is very much evident. Okay, so we know that the overall long-term picture is in a downward direction. So now what we have to look at is, we have to see how the price is behaving when it's in a consolidation zone. So let's say the price came here, it faced a little bit of resistance before it could go down. So what we could do is we could mark a resistance line right here, and that is only because we could see that the price came here, had a rejection, the price came here, had a rejection, and again the price came here and now it got rejected and it went to a downward direction. Very similarly, even over here the price was not able to break these levels and go down. How the price was not able to break these levels? Very similarly, it was not able to break these levels and go down. So keeping it short, long story short, this acts as a resistance and this zone acts as a support. That's clear enough. Alright, that's the first thing. So now we found out which is supply and which is demand. So now what we can do is, we should in order for any trader to be more profitable, patience comes to 90%. So what you can do is, the first thing is you're not supposed to trade in anywhere in these areas. Okay, you should either wait for the price to come around supply zone or near the demand zone. Okay, that's the whole criteria. So now let's say the price is exactly in between. So are you going to get into any kind of a trade? Absolutely no. Why should you risk? We don't know the price exactly in between, so we don't know whether the price will start moving downward or upward. So let's wait. So let's see what the price exactly does. We are going to wait for the price to come anywhere near the support or near the resistance and then look for trading opportunities. So in this case, it looks like the price is reaching the supply level. So once the price reaches the supply level, what we can expect is the price should either go down or it should break this and go up. The number one rule is, if it has to give a breakout to the upside, we need the candle to be closed above these levels. If the price goes here and comes back down, only leaving a wick behind, we are not going to enter. In order for us to enter, we need the close. Okay, it's always said that the market is opened by amateurs and it's closed by professionals. So we need a close above the supply zone in order for us to find out an upward momentum. If it gives you a close to the downside, we are going to look for only shorting opportunities. Okay, so let's see whether the price gives a strong upside close or a close to the downside. So now we can see, okay, now the price reached a very crucial area right here. Okay, so what we have to do is, we have to observe how the price is responding when the price is around these zones. Okay, that is important zone, this is supply zone. So let's see how the price is responding. So let's say okay, right here, okay, we are having something like, the price was not able to break above, but the price closed below. So is that enough for us to enter? No, we are going to enter for more confirmation. So let's wait for some more. Okay, so this is one more. Now I think the price is moving in a sideways direction. So here itself, we can see and we can mark, that the price is moving in a sideways direction, right? If you zoom in, you can see much more clear. So I think, this was a very, bearish move. So we can also probably expect a sideways market here, and then we can try and see if the momentum is giving to the upside or to the downside. Okay, so let's wait for some more confirmation. So let's say if the price gives a close and closes above these levels, we are going to look for buying opportunities. If the price is going to close below these levels, we are going to look for shorting opportunities. That is because we are not going to trade in these areas. We are going to enter the market only when the market is in crucial areas. Now is the market in the crucial area? Yes, it's exactly in a crucial area because price is in the supply zone. So most probably, just because we had a lot of rejections in the previous price action, we can see here, we got rejection, here also we got a rejection, and here also we got a rejection, we can most likely to have a break to the downside. But it's always said that each time the price keeps on hitting a particular zone, that particular zone becomes weaker and weaker. So we can also expect the price to close above and move in upward direction. So let's see. So okay, it's still moving in a sideways direction. Okay, let's see what happens. Okay, see here the price went up. Okay, see here the price went up, but the price was not able to close above these levels. Rather, it came up, took out the liquidity, and again went inside the consolidation zone. You get it? You can see this candle. We can see a huge wick right here. The price went up but swept all the liquidity and closed below, which means it's not. It has a tendency not to move upward. Okay, so let's still wait. We need a close, above this or below this. So let's wait. Okay, here we got a close, below these zones. So what we can do is, this is a supply area. So if it is a supply area, we have a lot of tendency for the price to move in a downward direction, and the overall trend of the market is in downward direction, right? So what we can do is we can look for a short opportunity right here. Okay, keep your stop loss above this zone. Okay, now what we have to do is we have to look for a very good target area. So now you can't directly expect the target to be somewhere around these demand areas. You can't draw such a big profit ratio. So what we should do is we should look for a closest crucial level. So we can see that the price had a good rally here. Okay, so we have to find out the genesis of this rally, which means we have to find the birth of this rally before the market could give such a big move. All right, where did the move start? Okay, where did the birth of this rally happen? Where was the genesis of this price momentum? Okay, so if you look closely, we can see that the price started to move in upward direction exactly here. So we can say something like the price was here, it came up, it took a support before it could move upward. So what we can do is we can mark a very crucial level right here. Okay, so we can have a zone here, and then we can just extend this line. Okay, so what we did right here is, let me delete this one. So what we did here is, before we could have this rally, right? Before we could have this rally, we have to find out the genesis of this rally, which means the start or the birth of this rally. So the birth of this rally was right here, and we marked that zone right here, and then we can have that one as a target profit area. Okay, so let's say we keep somewhere around these levels. So we got a 1:2 risk and reward. So that's almost about 1:2.36. So let's see what the price happens. You can see the overall trend is in a downward direction. Okay, you can see the overall trend here. Okay, the market is in a downward direction. Then the price started to consolidate. The price was in the supply areas. We waited for the price to come near the supply areas, and once the price came near the supply area, we waited for the close of the price below, and once we have the confirmation, we entered right at the close of that particular candle, keeping the stop loss above the supply zone, and then having a target for profit set before the genesis of the most recent rally. So which is the most recent rally? the genesis of the most recent rally is right here. So we marked that zone and kept a target exactly at these levels. So now let's see how the price has given the momentum. So we can see it right here. Yes, you can see this, right? So we can see this. So this is what it is. What we did overall is we waited for the price to come around supply zones, waited for a little bit of price actions to happen. The price started to move in a consolidation zone exactly at the supply levels. If the price had closed above the supply zone, which means it's a breakout to the upside, and we could have entered long. In this example, price did not give a breakout to the upside. Rather, it came near the supply zone, which had a tendency to move downward, and it gave a close below, and as soon as it gave a close below the consolidation zone, we entered exactly at these areas, right? Kept a stop loss above the supply zone, and then kept a profit exactly at the genesis of the recent rally. The genesis of the recent rally is right here. This was a zone, so we kept a target right here. You get it? So this is a very simple strategy, guys. All you have to do is look for a longer term trend. So the longer term trend is downward, and the price is moved in a consolidation zone. It had a rejections. We plotted a supply zone. And then we waited for the price to come exactly near the supply zones, and we waited for a little bit of price action to happen near the supply zone. And if the price had closed above the supply zone, we would have entered long. But in this particular case, the price gave a close to the downside. As soon as it gave a close and it came out of this consolidation zone, we entered exactly at that candle, kept a stop loss above the supply zone, and now made a profit exactly at the levels where the genesis of this particular rally started. So this is a very simple strategy based on price action. There is no indicator used. It's a pure price action. Okay, so yeah guys, this is a very simple strategy. So I hope you guys liked it, and if you're not yet subscribed to my channel, please subscribe to the channel and hit the bell icon so that you get the notification. And I'll be uploading such educational videos every week so that it would help the trading community. Okay, so yeah guys, have a good day and happy trading.